In today's video, I will show you how to use the visible Fibonacci indicator to detect market trade opportunities. The Fibonacci indicator displays Fibonacci retracement and extension levels on the price chart using data within the chart's visible range, providing traders with an automated alternative to our well-known drawing tool. This tool uses horizontal lines to indicate areas of support and resistance at the key Fibonacci levels before the price continues to move in the original direction. The Fibonacci levels are derived from the Fibonacci sequence and are commonly used in the financial markets to identify potential levels of support and resistance. These levels are determined by calculating the ratio of a number in the Fibonacci sequence to the number that follows it and then plotting those ratios on a chart as horizontal lines. Traders can then use these levels to determine where to set their stop-loss orders and take profit targets. As this sequence approaches infinity, the ratio of the last element to the preceding approaches the golden ratio, 1.618033, a well-known metallic ratio theoretically observed in many natural and synthetic systems. Many traders believe that the Fibonacci sequence and the golden ratio carry significance in the financial markets. To apply this trading indicators, search the keywords Visible Fibonacci on TradingView's Community Scripts folder. Select to apply it on your trading chart. Let's check the functionality settings for this indicator under the Input settings. Under the Fibonacci calculation type, there is an option for a visible chart range and visible zigzag. The visible will plot zigzag lines on the price chart. This is helpful to detect trend flow and changes on the price chart. Beginners can apply this option. Other settings are the Fibonacci levels and trend lines. Traders can modify the lines and colors, but do not modify the figure value of the Fibonacci levels. Others are the background colors, labels of price, and time labels. Traders can also modify this section. For ease of readability on the Fibonacci levels, it's advisable to uncheck the prices level here so as to allow ease of reading the Fibonacci levels. I prefer the Fibonacci levels to be pointed to the center. You can modify it here to be pointed to the right, center, or switch back to the left side. Take note, the visible Fibonacci tool is best for trend following in the market. How can we use the visible Fibonacci tool to detect buy and sell trade setups in a trending market? To detect a buy setup with the visible Fibonacci tool in a bullish trending market, Step 1. Identify the higher highs and higher low points in the price of the asset you're analyzing. These will be the start and end points for your Fibonacci retracement levels. Step 2. Study the visible Fibonacci levels and relate each test of the levels to previous support levels on the bullish price chart. The most commonly used levels are 23.6%, 38.2%, 50%, and 61.8% from the bottom to the top. Step 3. Buying at a support level is considered a low-risk strategy, as the price is more likely to rise from that point. To buy from any of the commonly used levels as support, make sure you figure out a powerful bullish price action signal bar for the confirmation of the buy entry. Stop loss should be placed at the low of the previous retracement level, support, to the level that confirmed our buy signal entry. To detect a sell setup with the visible Fibonacci tool in a bearish trending market, Step 1. Identify the lower highs and lower low points in the price of the asset you're analyzing. These will be the start and end points for your Fibonacci retracement levels. Step 2. Study the visible Fibonacci levels and relate each test of the levels to previous resistance levels on the bearish price chart. The most commonly used levels are 23.6%, 38.2%, 50%, and 61.8% from the top to down. Step 3. Selling at a resistance level is considered a low-risk strategy, as the price is more likely to fall from that point. Stop loss should be placed at the high of the previous retracement level, resistance, to the level that confirmed our sell signal entry. To sell from any of the commonly used levels as resistance, make sure you figure out a powerful bearish price action signal bar for the confirmation of the sell entry. It's time we execute 2 bullish trade setups with the visible Fibonacci trading strategy. As we can see in this bullish trend, after the price made a bearish pullback, the 38.2% retracement level confirmed a bullish price action signal bar. Time to buy. Stop loss at the low of the previous support level here. We will target 2 risk to reward ratio. Take profit hit. Here's another buy setup. Time to buy. Stop loss at the low of the previous support level here. We will target 2 risk to reward ratio. Take profit hit. It's time we execute bearish trade setups with the visible Fibonacci trading strategy. As we can see in this bearish trend, after the price made a bullish pullback, the 50% retracement level confirmed a bearish price action signal bar. Time to sell. Stop loss at the high of the previous resistance level here. We will target 2 risk to reward ratio. Take profit hit. Take note that the Fibonacci retracements are just one tool that should be used in conjunction with other forms of analysis, such as trend lines and moving averages, to make a more informed decision about when to buy or sell an asset. Also, it is important to have a proper risk management strategy in place.